Welcome back to 3 Towers Investing Channel, the #1 channel that brings you the latest in finance, investment, and innovation. In this video, let's hear what American billionaire and investor Ray Dalio has to say about the threat of economic collapse. Is there such a thing? Let's find out. Since 1985, American hedge fund manager and billionaire Ray Dalio has held the position of co-chief investment officer of Bridgewater Associates, the largest hedge fund in the world. In 1975, he established Bridgewater in New York. Economists often make mistakes in making forecasts, but not Ray Dalio. During the dot-com bubble and the 2008 financial crisis, Dalio made billions. Stagflation is one of the most terrible crises that we are now going through. When the economy is weak and inflation is high, stagflation results. The GDP dropped in the most recent quarter, while inflation has topped 8%. Considering that stagflation typically occurs before a recession, this is a serious issue. Ray Dalio has been researching the economics for ages and has identified a pattern. The cycle frequently starts with a rise in public debt, which benefits the economy momentarily. While in the short run this might seem logical, lending is a two-way street between creditors and debtors. The main problem is that when debt levels are too high, borrowers cannot afford to pay back their creditors. The debtor will be required to sell off property in order to pay back the loan. In order to save the economy from collapsing, the central bank will print money when it detects a weak economy. Printing money has long-lasting effects, even though it may be useful in the near term. Nothing more than paper is used to represent value as money. That paper's value will decrease as its worth declines. Prices will start to rise as a result of the central bank's interest rate cut. First, debt levels rise far too quickly. After that, debtors stop making their loan payments, endangering the economy. As a result, to promote economic growth, the central bank produces money. The basic issue of a weak economy has persisted over this period. The only difference is that printing money causes inflation, a brand new problem. Right now, we are experiencing stagflation. We have a poor economy and high inflation because creating money does not benefit the economy in the long run. The process continues as the central bank increases interest rates in an effort to hold the economy. Dalio said, "We have no control over the situation." The inflation issue will get worse if the government keeps printing money. Reducing demand is the only way to control inflation, and doing so requires taking money out of the economy. Dalio believes that we are currently in a period of stagflation and that a recession or depression will follow. The situation we are in is also regarded as a sign of economic weakness and stagnation, he continued. According to Dalio, stagflation comes before recessions. The last time stagflation occurred was in the 1960s. The government took out loans to fund social programs, the Vietnam War, and the purchase of food and weapons. The US government nevertheless created money because it lacked the resources to pay down the debt. As a result, the US economy grew slowly and there was too much inflation, which is known as stagflation, atypical for their period. The 1970s paved the way for the United States to run out of money in 1971. By printing much more of these paper money checks than there was gold in the bank to exchange for them, the United States was spending a lot more money than it was producing at the time, Dalio wrote on Twitter. The amount of gold in the United States began to decline as people swapped these checks for gold money. People who had dollars hastened to convert them before the gold ran out because it quickly became evident that the United States would be unable to satisfy its pledges for all existing paper money. Stagflation increases the likelihood that an economy may lose its fiat currency, particularly if the government continues to print money. The 2008 hyperinflation in Zimbabwe serves as a good illustration. The government made the mistake of printing ever-increasing amounts of money, which resulted in daily inflation of 98% for the Zimbabwean currency. People have faith in fiat money. Thus, it has value. The value of the US dollar will decrease if people stop believing in it. Additionally, when the dollar's value drops, more individuals express skepticism. The Fed has created a positive feedback cycle, which drives the value of the dollar further lower. At the moment, the Fed is reducing money at a pace of $1.1 trillion per year. Dalio admitted that he's not shocked that we'll be dealing with a crisis this large. The United States had two recessions in the 1970s, the first in 1974 and the second in 1979. Only because of Fed Chair Paul Volcker did the US avoid this tragedy. In 1979, Volcker raised interest rates to fight inflation. As a result, the economy saw volatile swings, with GDP mainly decreasing under Volcker's presidency. But more importantly, other nations suffered far more than the United States did. Other countries' debtors were compelled to enter 10-year depressions. Dalio added that, as is always the case and would be this time, inflation was suppressed as a result of people and businesses being painfully pinched and reducing spending. As was previously said, money printing caused the capital markets to overextend in 2021, as Dalio knows from his bubble gauge, which he uses to judge whether or not stocks are pricey. Dalio's bubble gauge can be seen classifying bubbles into percentiles. The bubble gauge 99th percentile of bubbles was attained in the 1920s. Similar events occurred in the 1990s, which remained in the 99th percentile for a long time before coming to an end. The 2020s were in the 85th percentile of bubbles before the current catastrophe, but they are currently in the 40th percentile. So under Dalio's perspective, stocks are considerably undervalued. Dalio's index indicates that the frothy enterprises have deviated from the average. He thinks the bubble stocks will keep declining. Dalio is making a prediction based on history. The 1920s and 1990s were pretty comparable to the 2020s. Growth stock value rose sharply in each of these three eras due to cheap monetary policy. He was able to foresee and evaluate previous trends as a result. For each of the three time periods, Dalio plotted the Nasdaq yield on 2-year government bonds. The current bubble is more detrimental than those in the 1920s and 1990s. Another device Dalio uses is the leverage gauge. He takes into account the market's options, holdings, and margin debt when calculating leverage. We are currently at the 50th percentile of the data set, which is close to the average, according to the leverage gauge. Some investors might believe that there is little to no risk as a result, but Dalio is not persuaded. He has witnessed how frequently bubbles overcorrect. Similar to how the economy swings back and forth, bubbles vary more than the fundamentals would indicate. Although the market's current average level of leverage may seem appropriate, bubbles typically overcorrect to the 20th, if not the 10th percentile. The upcoming overcorrection will be extremely profitable for Dalio. He allegedly holds a $10 billion short position in a number of European companies. He is shorting firms that are similar to those in the Euro Stoxx 50 index, an index that tracks the top 50 most heavily traded stocks in Europe. If he holds a short position in the US market, it's not surprising. And that's it for this video. Don't forget to like, share, and click that notification bell to get updated whenever we have new exciting videos. This is your 3 Towers Investing channel. Thank you, and see you in the next video.